morning, good afternoon, good evening, yWhales, wherever in the world you are today. So today is May 23rd, 2024, and the world is suddenly taking a massive pivot and change. I was supposed to record with these two gentlemen last week and we had some technical difficulties. However, I think it actually works out for the best because the world has literally pivoted on its head related to cryptocurrencies, regulations, and everything else from one week to the next. And these two couldn't be any better of co-hosts to really kind of walk us through what is happening, where is this going, and what are those changes going to mean? Bitcoin, I think this morning was at like 71. Right now, I think it's plummeting down to about 67. Not entirely sure, what is that, World War III, whatever the case is, because the news cycle is relatively positive towards cryptocurrencies. That being said, a lot of ETFs and regulation is really going to be the point of today's conversation. So we want to walk through as clearly and slowly as we can when we talk about regulation. FIT21 is the topic of the day. It has not passed officially. It has not been signed into law. Most likely a few changes coming down, but this is the most positive, cryptocurrency or blockchain related, passage of law that we've seen to date in the United States. It mirrors a little bit with MiCA and MiCAR, so a little bit, but we'll dive into that in a minute. I think we really need to understand kind of who my co-hosts are today. So Chris, if you don't mind, let's go ahead and start with you, your background and kind of what got you here today and what you're working on.
Sure. So thanks for having me, Jay. Chris Hart, CEO at CIVIC. So CIVIC Technologies is a company that provides identity and access management tooling for multiple chains in the blockchain space. We actually work with Web3 companies. We also work with Web2 companies. We have a product called CIVIC Pass. CIVIC Pass is basically used so that compliance can be achieved for our customers, and compliance can mean a variety of things depending on what the customer is doing. It could be financial compliance for AML, BSA. It could be for DAOs that are trying to prevent civil attacks. We work with a lot of NFT projects. We work with a whole host of companies kind of across the spectrum. And what we do is we have a product called Civic ID. And that product actually allows individuals to come through, do identity verification. That identity verification can be kind of on a spectrum, everything from CAPTCHA to full ID scan. That could be a passport, government issued photo ID. We have a product called Uniqueness. Uniqueness is really useful in the context of things like AI deepfake prevention, that sort of thing. And so I come at this actually, Jay, from a background in fintech. Yep. I come at it from a background in technology. I worked at one of the very early stock and option trading companies here in San Francisco. We had the first handheld trading platform on the floors of all the exchanges throughout North America. This was in the time when, in order to get your trade through faster, you would try and build your data center as close as possible to the exchanges. So you would, line of sight to NASDAQ, line of sight to the NYSE, the biggest fiber pipe you could possibly put in.
Yep.
And I used to work on the floors of the exchanges, telling the traders, why our system wasn't fast, and they would scream in my face and that sort of thing. I went on to be a controller and a CFO for a big public company out of France. And then I've worked with a number of startups here in Silicon Valley. And really for the last 7 years, what I've been interested in is how is blockchain and identity technology going to converge in a way that's going to enable the next generation of applications to be built in a distributed ledger world. And I think today is going to be a really interesting conversation because the US up till now has kind of been a laggard in terms of being able to unblock innovation for all the companies that I think want to be innovating in this space. I've seen a lot of companies driven off the US shores to go build in other environments. And I think it's a good signal, even though we're not all the way there, that we're starting to recognize that we need to keep innovation, not only here in the US, but work with innovation that's emerging elsewhere throughout the world. So a little bit about me.
And I love that. We spend a lot of time on this podcast and in yWhales and everything else we do, really talking about regulation as a means to protect consumers. And a lot of people don't view it that way. And you having that experience of all the way from the trading floor and everything else, like it's not just as simple as like, hey, I can make a different ledger. I can make a different system that works. There is so much time, energy, effort into making sure it's secure, making sure it's fair, making sure that it's auditable, and that if something goes wrong, that you can undo things that malicious hacks. Because if the stock market, and it happens all the time, there's hacks, there's malicious attacks, there's spoofing events. You can't just say, well, the money's gone, the market's gone, and everyone's there. Nobody's going to go play in that playground if there's always that fear. And so I really appreciate you being here today to talk about this stuff because identity is one of those key pieces. Fraud is ripe across the cryptocurrency markets. I don't believe Web3 as it sits is a safer system. I think it's a better system, will lead to a better system, but I don't think we're there today. So excited to kind of have you in on this conversation. Thank you so much. And jumping over to Dash. Again, I love the shirt, privacy. It is top of every mind. And blockchain is just, as it sits, generally not great for privacy.
Yeah, there's a lot of challenges there, right? I'm sure we'll go into a lot of that as during this call. But yeah, in terms of background, most of my career has been in the data and analytics space. I used to work for a company called Web Trends. We sold that company to Oracle back in 2017. Ultimately our job at that company was to, help larger companies collect as much data about people as possible, often without them knowing, right? I'm a big believer in the power of data as well. And ultimately what we kind of look to solve at Concord today is that idea of kind of ownership, privacy, consent, and all those things that go along with it. What that means in practice, again, I'm CEO of Concord. We basically help companies comply with global data privacy regulations. So that includes GDPR over in Europe, the growing number of laws across the globe, and here in the States as well, where we now have 18 different laws across the different states. And I think roughly 10 of those in the last 6 to 8 months. So a lot of stuff that's happening there. And ultimately it all comes down to these different kind of concepts of control, ownership, consent, all those pieces. And those are, of course, really, really important when it comes to blockchain as well, but extra challenging when it comes to blockchain due to the nature of blockchain in general, the immutable nature of many of the blockchains that are out there, right, ultimately. So especially the kind of decentralized systems that we have. So ultimately we help people comply with those regulations. We do that in a few different ways. We do consent management, which is standard kind of cookie consent, universal consent for other types of consent that users provide. That's a part of most of the different privacy regulations that are out there today. The second piece we do is privacy kind of request handling. Some people call those data subject access requests. Ultimately, most of the privacy regulations out there require people to be able to submit requests like get a copy of my data, delete my data, that type of stuff. We basically provide the ability for them to submit that via our privacy center and different types of experiences that we provide for companies. And then we also have automated workflows for those things in terms of dealing with those behind the scenes. And then the last piece we do is what we call data mapping. Data mapping basically ties to the types of data and systems that companies are ultimately utilizing and making sure that you understand what are all the systems you have at play at a given company, what type of data flows between those systems, and then ultimately what happens when someone requests data from those systems as well, right? When you do have something like a privacy request. So a lot of really interesting stuff there. I think as we go through kind of the conversation today, especially with FIT21, it'll be really interesting to kind of talk about how these things all kind of interplay off of one another. Mm-hmm. So there's a lot of interesting stuff that's happening in that front. And I holistically, I'm a big fan of what's going on there. We've had a lack of clarity for quite a while. Yes. And so that's been a huge, huge issue. So the fact that, we're getting bipartisan support in the States to really start to clarify some of these things. And even though there's some folks that maybe are against that still today on the SEC side, I think when you see what's happening between them and the CFTC with FIT21, I think there's a lot of advantages that we as, innovators, we as folks, in these different locales actually get access to. And that ability to really leverage that and be able to innovate, to your point, Chris, in a very predictable manner, and to know what is the right thing and what's not the right thing to do in these scenarios is really, really important. I think last thing I'll add is we are blockchain adjacent. We ultimately went down that path a few years ago where we are considering some things like what you were doing, Chris, with token launches and those types of things. We actually decided against it due to the regulatory uncertainty, right? And so we we were really kind of worried about those pieces impacting the core business. And so we decided against it because of that. And so it was stifling innovation even with us, internally. And there's a lot of stuff that we ultimately like patented and built out as MVPs, and we ultimately never released that stuff. And that was because of that lack of clarity. So really excited to talk about how all those pieces play together here.
Yeah. And again, this is like the perfect panel for this conversation this exact week, because, when you're talking about the regulations and all these workflows that you're building, you didn't just come up with these on your own. You didn't just say, hey, community, pick what we want to do and let's figure that out. And then, 20 other companies are trying to figure it out. Like, there's standards, and those standards are based on best practices, generally with decades and decades of fraud and laws that have had to be passed. And I think it's really interesting, kind of how you built this. Now, the other side of the conversation is we're seeing a lot of similarities to other, emerging industries in the United States. The one I think that cryptocurrencies is most similar to is the marijuana industry. It is not federally legal in any way, shape, or form, but the states have been able to kind of like, hey, we're going to allow this. We're going to do a number of things. And so, just as you said, you've got about 16 states, that have passed various laws, but they're not compatible with each other. And so from state to state, you kind of have to be able to do this dance of like staying within the law, but then always remembering that the federal government like says, no, this is a bad thing. It doesn't work. Just real quick as a question before we get going, like how hard is that to deal with?
Yeah, it's definitely hard as a company. I think all these things are a little murky and muddy at times. And that's kind of what we ultimately look to help folks solve. But I think in general, it's just better clarity and simplification for folks to basically really understand how they can proceed is a really good thing for, not just the large companies, but small and mid-sized businesses as well. And it's definitely a challenging environment to deal with, right? When you have all these different types of laws. Now, that said, I am a supporter of the ability for there to be additional kind of state implementations of these things, right? Ultimately, I think it's an important mechanism so that there's not just a lowest common denominator. There's actually the ability for more innovative and progressive kind of ways to approach some of these problems can come down the pipe. So I think that's actually, you see that in kind of the data privacy space, but we're also seeing it with crypto quite a bit and blockchain in general, right? Where as an example on the privacy side, there's actually been a kind of two different federal bills that have been debated for quite a while. We probably won't get one this year because it's election year, but I would assume that they'll actually finally get one that's passed next year. And they're kind of the main difference, and even though there's been bipartisan support, the main difference of opinion has been over whether or not the federal one would supersede, right? And whether or not like all of the individual state laws would go away. And I do believe that there needs to be some room for those types of things, even though you also want to reduce the headache for companies at the same time.
Yeah, no, this is fabulous.
I think some of that ends up resolving itself in that from a privacy and consumer data protection standpoint, companies are going to end up resolving to the most restrictive standard because it serves the broadest audience. So in the same way that California has a law that's not dissimilar from GDPR, it's called CCPA, which is a consumer protection privacy, framework. If you're going to be compliant with CCPA as a US company, you're just going to do that for your entire customer base across the country. Yep. So I think in a way, we can see pockets of regulatory clarity emerging. And, granted, Europe was like way ahead of the US with GDPR. And because, we're a multinational company, I assume you serve customers dash elsewhere in the world, you end up saying, okay, well, we're going to comply with that. So I think FIT21 in a way is interesting because the difference maybe between sort of the marijuana industry, at least for me, and this is there is this idea of markets that are sort of federally regulated at a level that supersedes the state sort of interest level. Yeah, they have a consumer data privacy dog in the fight, but do they have really like a currency and commodities and securities opinion? Some states I think have more than others. Delaware, where everybody's incorporated, maybe has a little bit more of a corporate hat. But I think, what we're going to see is as clarity emerges, people will just say, okay, what is the one that will allow the most participation? Like the accredited investor law, you can love it or hate it, or it's not a law, but it's a framework. in order to be an accredited investor, you have to prove certain things. That framework then gets applied to all kinds of investment vehicles in a way that I think unlocks people to say, okay, at least we know what the rules of the road are. We can move our business forward and not be worried about a lawsuit 3 years from now when somebody says, oh, wait a sec, you did something wrong, 3 years ago, absent any kind of rule or regulation to point to.
Before we start on our next topic, here's something really exciting. Everyone struggles with these really highly complex, intricate Ethereum names. ENS has a solution that's really game-changing for you. Revolutionizing your digital identity with ENS. Transform long, complex Ethereum name addresses into easy-to-remember names, safely, securely, and uniquely yours. Visit ens.app to get started today, and ENS welcomes you to the new internet. Yeah, I mean, really, we are sitting on the cusp of, the Millennial Copyright Act being passed. Like things that will, like what we are looking at today, people should not discount as like, oh, it's another law, it's another bill. Like what they're passing today could be decades, 20, 30 years of how we build, on blockchain. And, this is a big departure from Swift. Everything is changing as we know it. But yeah, let's kind of dive in because I think there's just so much to talk about. And so I do want to talk about the ETFs, but I think that, we're kind of on the FIT21 conversation. So FIT21 stands for Financial Innovation and Technology for the 21st Century Act. The other part that I want to talk about in relation to it is MiCAR, which is Markets in Crypto Assets Regulation. That's the European standard. The European one is, they've been working on this for years. It's coming live literally in, I think, about 2 weeks, sometime in June. MiCAR comes live. So we're going to see kind of this regulation. Just to kind of dive through, and like I said, then we're going to go back through a little bit of the differences between these. So securities under FIT21 are now going to be directly regulated by the SEC, offered as investment contracts. In MiCAR over in Europe, you only have to manage securities if they are outside of existing regulation. So a lot of times they said, like, look, a security is a security. You already understand it. We're not going to change the laws. If it's tokenized, great. Here's how you still have to do the exact same disclosures under MiFID II. So they kind of took MiFID II and just rolled it right into MiCAR. So there's a really good combination between we already have decades and in their cases, centuries of laws. Tokens don't mean anything different. Jumping back over into FIT21 commodities, this is the biggest difference. Securities are the SEC, commodities are the CFTC. So you now have a separation of, generally I use church and state, but that's not the case here. It's state and state. So two different government entities. And then over on the European side, it's commodities are really only if it's drastically different. So if they kind of just treat everything like a security unless there's a reason not to, and there's specific cases. Currencies, there is absolutely nothing specified in either case, but stablecoins absolutely are. So stablecoins under FIT21 are regulated as crypto assets, means there's clear regulatory guidelines and mandatory disclosures. So Circle is this is very much Circle has been building towards this. I don't know if they're going to have to make many changes to it. I don't think a ton. MiCAR is the exact same: crypto assets, disclosures, regulations, financial. Like if something happens, the project managers, the devs, you're all liable for this. That's the biggest thing. If somebody's liable, rug pulls cannot exist. No one's going to launch a coin without disclosures, without insurance and everything else. And then the last one is digital asset service providers. So that's what we're doing here. So we provide services and everything else. So under FIT21, subject to regulation, disclosure, and operational requirements. They're going to tell us what type of insurance we have to have. In fact, you guys can probably be really clear. So right now, Chris, when you're doing, you're both of you guys are global. Just talk a little about some of the regulations. We'll start with you, Chris, that you guys have to adhere to compared to like the anonymous devs that are like, the code solves it all, right? Like it's just, It's math. You can't, So talk a little bit about like how you feel now, hearing those two differences. And there is a lot of unification now. So like the concept of a global economy is becoming much more real than it ever has before.
Yeah, it's interesting, Jay, because we have found ourselves over time sort of in this advisory role to startups who come to us often with a brilliant idea, a lot of technical innovation, a lot of coding chops. Maybe they're on an EVM L2 chain. They've got this great idea to stand up, like what amounts to a fintech, right? I mean,
Yeah.
it's an automated market maker, decentralized exchange. Maybe it's a staking protocol. It's one of these emergent DeFi products. And they're sitting there with, three of their buddies coding this thing, and they don't need a lot of people to go build these systems. And what we found is we end up in this kind of advisory capacity because, we end up saying to these great young founders, hey, what you're doing actually touches the third rail of fintech compliance in the following ways. You need to comply with Bank Secrecy Act. You have anti-money laundering laws that you need to comply with. There's all of these things that you're touching that you're not really thinking about. And maybe you're not incorporated in the US, but unless you're going to bar people from the US in participating, you're actually subject to the laws here in the US. If you have one person trade on your exchange sitting in California, okay, well now like the SEC has full access to come after you, right? They have, I won't say it's a pretext, but they have a standing to go after these exchanges. So with what we find is there's a cohort of builders who don't have exposure to those sorts of financial compliance implications. They haven't really learned necessarily what all the things are. And by the way, the laws aren't clear. And so they're kind of operating in this gray zone and saying, well, look, absent information that is very clear about what we have to do, what you're telling us is we should do these really hard things because look, all of these compliance activities, they add cost, they add friction to the user experience. They slow down your ability to go to market. And if you need to do contract audits, smart contract audits, and you've got to have insurance, now suddenly that startup that you thought you were going to get off the ground with 3 developers and 250K is going to be 5 developers and $1 million. And
Yep.
you're not going to have product in market for a while. So sort of helping people understand that this is coming at some point has been, a very long-standing narrative. And it's been frustrating, I think, for the identity industry because we have the tooling ready to help them comply with the laws that have been coming, Jay, for the whole time I've been in the industry, which is like 8 years. It's like, hey, clarity is coming, clarity is coming. And MiCA was the first thing out of the gate. We also have some new laws coming on the privacy side in the Eurozone
Mm-hmm.
under the EU, what is that, IDAS 2.0,
Yep.
which, it's a mouthful. So I'm very positive on this fact that we now can tell people, well, look at the laws, even if they're not fully passed, that are indicative of what is going to be in place. And we've been doing that with MiCA in the Eurozone, in the travel rule, and the transfer rule, and helping people understand what is a CASP, what is a VASP,
Yeah.
all of these terminologies and where do they fall into those buckets. And then what we do at CIVIC is we try and help them say, look, you don't have to be compliant everywhere out of the gate, but you need to tailor your offering to an audience where you are going to be compliant, where you can be compliant. You need to give the users the ability to know what information you're gathering, to be able to request deletion of that information, like Dash was talking about, under these identity and privacy rules, whether it be GDPR or something else. And so, I think we are at this tipping point right now where we're going to see this sort of Cambrian, I know people use this phrase a lot, the Cambrian explosion, but I actually think we're going to see this really interesting fintech sort of focused movement into DeFi because in many ways it's better. It's
Yeah.
24-hour a day trading. It opens up, products and services to a much broader audience. I talked about the accredited investor stuff a little while ago. Like that bar to me is way too high. And we need to open up financial services much more broadly to people with the right disclosures, with the right insurance, with the right rails. And now we're going to be able to do that, not just in the US, but I think have a global compliant infrastructure layer. And distributed ledger technology is not great for everything. Let's be clear, right? Like writing to the blockchain is slow in comparison to any financial services transaction today on NASDAQ, NYSE. You could say Swift is slow, but it's also like everywhere,
Yeah.
right? All the banks are connected, right? So there's advantages to the existing systems. And now if we can come in a compliant way with this cycle of innovation, it's really exciting. So for us, I think it's what's next, and we're part of it. So,
and you brought up some really good points, and I just, I unpack a few things. Number one, I agree with you on Swift. I can hate it as much as I want. It's horrible. It's slow. It's very expensive. I mean, there's still parts of it that run on dial-up modems. That's how old it is. But you're not going to beat the credit card. You're not going to beat, like, at this point when people are like, oh, we're going to, create a new payment system and everything else. Like, we've seen Square do it, with a little bit of the, Square and Venmo, a little bit, but like we're talking a fraction of this. When I was younger and I used to travel outside the United States, we had these things called traveler's checks. Like you had to get them and you had to take these things because your credit card would not. Like American Express was decent, Discover Card, but for the most part, like you could not travel the world and expect to have financial freedom to do or buy or anything you wanted. You'd have to take these traveler checks, go get the local currency and go back and forth. It still occurs, but I've traveled, like I said, we were talking before this, I was 120 days on the road last year, 30 plus countries. My credit card worked anywhere and everywhere I wanted, all the way from emerging markets, to one didn't. It didn't matter. It flows and it works. That's not going to go away. Now that may live on a different rail system at some point. But we don't want to tear it down. It's really easy to say tear it down and start over. But it's really hard to build. To get credit cards ubiquitous was 3 or 4 decades to where it is today, and we don't want to lose that kind of access. We may want to change a few things. Dash, jumping over to you. Here's the main things that everyone can just stop talking about. It's going to happen. You're going to have identity verification. You're going to have disclosure requirements. You're absolutely going to have a segregation of consumer funds from operational funds, which is, again, these are like for us business professionals, like you don't even think about this. But a lot of these small devs, as Chris just said, give me a couple cases of Red Bull, and in a long weekend, we can create a new protocol and we'll call this the new, financial freedom. And then when it fails and everyone loses their money, no one knew who they were in the first place, and they just move on to the next, deal. How do you feel that, like, you've been saying this for so long, built a company on, like, it's not going to be the Wild West forever?
Yeah, it's a really good point. I know you talk about it quite a bit, but like consumer protection is a really good thing, right? Like it's one of those things that we need in the industry, I think, overall, especially blockchain here to ultimately make it move into the kind of use case territory that, Chris, you've been driving since day one. So like you guys have been doing some really interesting things since the founding of CIVIC. And so like it's great to see actual use cases, but on the other side, there is, quite a bit of still kind of scammy stuff that happens in the industry. And that's not, I think, blockchain or crypto's fault necessarily, right? People move between different areas where there are places where you can actually make money with a little bit of effort that maybe unfortunately harms certain folks, and I think that's the nature of it. Like this has happened. It's not just crypto. It happens in gold. It happens in commodities. Happens in all types of areas, right? And it just kind of moves around based on where the easiest targets are. And so I think consumer protection, the ability for that stuff to come into play, but to be really clear, as we talked about earlier, is just super beneficial for all of us, because we can continue to innovate, have real clarity around what are the right things that you need to do as a company, but also make it not extremely prohibitive to the point that it stifles innovation. And I think that's kind of what you're mentioning, Chris, where you kind of have two kind of schools of thought today, right? Especially when you're looking at new builders like the folks that you're mentioning. And one of those is that you just kind of like do whatever you kind of like get out there and you just take a bunch of risk on, and you ultimately build out some stuff that's not compliant, that's not safe, and it's really problematic. Often there's, in those scenarios, not on purpose, but there often ends up being scammy kind of components of that. I think on the flip side, you have the companies that want to do this correctly. They want to build out real innovative technology, and they want to create really interesting products like the ones you're talking about, Chris, and you as well, Jay. And I think that ability to have that clarity, but also to reduce the headache that's required to do those things is such a key thing to make sure that, here in the States, especially for us, as we kind of continue to push innovation, we're able to compete with the other regions across the globe in this space. And I think, unfortunately, we haven't been able to do that as much as we'd like over the last few years because of that lack of clarity. And so it's really exciting to see FIT21 kind of get the movement that it got. It's also exciting to see the fact that there is like willingness, I think, at the Senate and other areas of the different branches of government to basically support a clearer future in this space and to ultimately drive the right types of things that we need to drive. So I think consumer protection is a key part of that. That really is super important when it comes to making sure that people are protected. Nobody wants to get nobody wants to get scammed, and nobody wants to encounter those issues. And unfortunately, it sometimes reflects a little badly on the industry that we're part of, right? And that's the thing, is like there's so much innovation and power and in all the technology that we have at our disposal when it comes to blockchain and cryptography and all the different types of cool things that we deal with on a day-to-day basis. But unfortunately, there's just those problems that are still there because lack of clarity, lack of guidance. And I think, to your point, Chris, from earlier, it's good that there are things that are coming down the pipe that you can point to and start to take advantage of and understand where this is probably going. But it's going to be extremely beneficial when those things are much clearer and just written down, and like folks understand that, okay, here's the actual answer to that question. And yeah, we've been talking about it in the States for a while. Like, when are we going to get an answer? What's the way to do this correctly, right? And like just using old enforcement action types of mechanisms and those types of things is not the answer. There needs to be like clear guidelines around blockchain and crypto in general. And like, how do you actually build and utilize that type of technology in super creative and innovative ways that, to your point, Chris, we have like really great builders out there, really great innovators that have built a lot of amazing tech that I think is going to be a core part of really, really powerful things in the future state. Already is today. And the more that we make that possible here in the US and across the globe, the better.
Yeah, I was just going to add one thing, which is scams tend to get the most focus from like a news cycle point of view because there's a person you can point to who was harmed. But the reality is, I think the most transformative part of clarity is going to be the infrastructure layers are very subject to hacks and interference. And the majority of the dollars that are being sucked out of the blockchain crypto ecosystem in a fraudulent, scammy way are not one-on-one scams, although those are the ones that we hear about because there's a person behind it. There are hundreds of millions of dollars that are because bad smart contract writing, bad, wormholes and bridges in between chain. Why am I moving
no pen testing
to chain?
No pen testing.
Yeah. No pen testing. I mean, so having some of these laws be really clear. Yeah, the consumer protection stuff is super important, but also the builders that we're talking about have to understand that if they have liability, they're going to have to up their game in terms of the robustness of their platforms, and that there's going to be penalties. And I think that ultimately is a good thing because that's where the majority of this stuff at scale is going wrong. Even though you hear about the scams, because they make the news.
The one group that I can hear screaming already that don't even understand what's coming is the bloggers, the YouTubers, and the crypto bros, because suddenly marketing and advertising disclosures are like a real thing, like Reg D, Reg A, Reg S, Reg CF for crowdfunding. Like, there is there's got to be an entire new department at the SEC and the CFTC to do nothing but go after the social media bullshit that has been being spewed for years. Like, I am so sorry, and I understand the Doge. I understand all the math behind every single one of these things. You're gonna have to do real disclosures. You can't just say, this coin to the moon, and I think that's a good thing. I mean, there are so many people that I know they're brilliant and they're smart and they still fall for these scams because they don't understand. I get calls, weekly or monthly, depending on where the cycle is. The worst I've heard of is a $13 million scam. And this person absolutely believed every single thing that was being said, followed, everything to the T, and it was a rug pull. And that's just insane to think about at that level. Chris, or actually Dash, this is well within your realm of like marketing disclosures, all that kind of fun stuff. You know, how are they even going to, these projects going to handle all the new regulation that's about to be just like Encyclopedia Britannica slammed on their desk and say, all right, come coin, how are you going to handle this shit?
Yeah, well, I think part of the answer is that some of those things will start to go away, which is a good thing, right? As it becomes harder and the risk becomes bigger, I think it's ultimately good for all of us in the industry and all of us as consumers as well. So I'm glad to see that direction, even though it does, have that impact on some folks to get rich quick in some ways, right? Unfortunately, that's usually at the unfortunately the impact to somebody else, right? So I think ultimately we don't want to see that stuff continue as much as it has. So I think all of that's good. But yeah, I think in general, when you look at things like you're talking about disclosures and everything, I think overall, and this is the way we look at it, is we're big believers in transparency across the board, right? We believe that it builds trust with people in general. And so one of our core missions is that, which is the more transparent you are as a company, including things like that, the right types of marketing disclosures that are required by different regulations, the better, right? You ultimately want to create a connection with people as a company and really make sure that they understand that you do have their best interest in heart. You're just trying to create a relationship with them. And I think that's the shift that's happening. And I think that's going to be the powerful shift over time that finally gets us to that place where it becomes much more about really interesting use cases and the type of stuff that Chris is doing at CIVIC to basically move us into this next evolution of the technology to really take advantage of a lot of the real smart innovators that are out there that building cool tech that understand like the power of this technology and where it can take us in the future state, but to do it in the right way so it still protects people, and to do that where you can actually build a real relationship that matters with people over time as well. And I think that's where we need to get to, and I'm excited about that next stage of movement, right?
I love that. You know, jumping back over to you, Chris, like identity, which is what you guys do, what you've done for years, and you've kind of like right there at the precipice of this thing. Again, I don't think a lot of people really understand what's coming down. And it's not going to be like crypto's legal and everyone's going to leave us alone. No, we now have a lot of oversight. Accredited investors need to be known and has to be managed in a variety of ways. State to state law requirements, reporting, the disclosures, all that stuff has to be kept, and it doesn't have to be on the blockchain. Like that, to me, everyone wants to make a cake out of one ingredient. Like you don't have to do everything on the blockchain. It's expensive. It's slow. And for some things like identity, you don't want it on there. You want it,
Right.
I've always said token gating is one of the most brilliant features that we'll see that allow for us to have access to things to use it. But how do you feel? Most of these companies are going to deal with the fact that it's like, no, you can't just offer this for sale to anyone now. You're going to have true identity management.
I think actually the paradigm is going to shift kind of a little bit in the following way, which is with regulatory clarity, a lot of these regulated endpoints where users already exist are going to be asked to join the party. And what I mean by that is for those people who already have a presence in the traditional financial world, you have a bank account, you have a trading account with a brokerage, you have a driver's license, maybe you have a passport, government issue photo ID. There are organizations behind you as an individual that have done a certain level of vetting. In order to get any of those things, you've gone through a process, you've gone through a flow. It can be very robust or it can be very cursory, but there are elements of your identity that have been verified. We think of those as pieces of the identity puzzle that then ultimately you as the individual should know who's got attestations about you, where have you loaded credentials to these organizations. And so you can imagine a future, Jay, where you say, okay, I've got an account at Chase, and that means I've gone through KYC in order to have a bank account under the existing laws as they exist today, because they're a federally chartered bank. In order to keep their license, they have to do that. And they have to do things like submit suspicious activity reports. If I trade over a certain amount, they have obligations. So if I can onboard through that bank, turn my US dollars into USDC, and then access a decentralized exchange where all of the assets there fall under this new framework. And then, oh, by the way, everybody else who's trading on that exchange, maybe they came through Santander Bank, maybe they came through Deutsche Bank, maybe they came through some other means. But all of these regulated parties that already exist, they're not going away. What they're going to do is to say, we're going to take our customer base, and now that things are clear, we're going to be an authoritative attestation behind these individuals, and we will stand for them, because guess what? We're still the fiat onboard offboard.
Yeah.
We're still the point of sale, card issuer. And so they have a stake, and they don't want to lose that customer base. This is existential for them. So they need to get on board. So what we're trying to do is help consumers understand, who are these authoritative parties behind you? How can you take these attestations safely, not putting PII on chain, but having credentials and having tokens on chain, very similar to a soulbound token. That's what we do at CIVIC, so that you can do things like have that token follow you around as you move through the blockchain ecosystem, as you buy a Bitcoin ETF, an Ethereum ETF, trade on a platform, whatever. But you should be able to control that as a user. So on the business side, I kind of think of it like private networks on public blockchains. It's almost like a VPN kind of framework in my mind, where the public blockchains are out there, the L1s and the L2s. You should allow people who've been verified to come in and trade on DeFi platforms, so long as they've been verified by authoritative parties on the back end.
Yep.
And I think that's where we're going to get to. And as a consumer, I just want to know, who's got my information? Did I give them permission? Can I revoke it? Can I see the activity of people hitting my identity account? And that's what we're busy building at CIVIC with the CIVIC ID system.
The FBI, the NSA, and the CIA all have all that information, and no, you cannot delete any of it.
Yes.
So here's a question, and like I said, Dash, I'll jump back over to you on this one. So again, to me, I'm going like, great. We have it's going to dynamically change everything, but it's going to give us a path for those of us that do want to follow the laws, for institutional and professional investors that actually want to utilize this new financial ecosystem. And it's kind of a pivoting. You're seeing a difference between like Apple Music and Spotify versus like LimeWire and Napster. Like you're kind of seeing this kind of a little pivot that's going to happen between, the regulated internet, which is what we all kind of live and work in today, and the dark web, which still exists and is never going to go away. That being said, how does Ethereum manage some of these rules? And I'm going to say this because, again, there's going to be disclosures. So if Ethereum now, again, that's great that they're going to be called a commodity, or theoretically, we'll see where that ends up coming out. But now, like, there's liability. And you can say decentralized all you want, but we've seen that they do have the ability to ban Tornado Cash users. They do have the ability to basically blacklist wallets, decentralized or not, and kind of really cause issues in this entire chain. So if you're using an unsecured protocol, such as Tornado Cash, they can go ahead and blacklist your wallet. Freeze your circle, freeze a number of other tokens, and make you not be able to use other services. Now it could go even much more into that direction of like, hey, you purchased these coins, you launched these coins. There's going to be real repercussions, and there may be federal agents knocking on your door, wherever in the world you are now.
Yeah, I think privacy and blockchain, like we mentioned a little bit earlier, is a real interesting one, right? Because, nobody wants to expose their, all their transactions to folks, right? Like that's just a super problematic scenario in a lot of different ways, right? Like that's why you would typically not want to, regardless of the price of Bitcoin, use it often as a currency, like a hot dog stand, because like you don't know who that person is, and ultimately you're exposing your whole history to that person at that point in time today without using technologies like the ones you're talking about. And so I think there's definitely a place for that privacy preserving technology. On the regulation side, of course, they're looking at it from a different lens, right? They're not worried about that side ultimately as much as they're worried about, the criminal activity kind of component, which I think can sometimes be overstated, but ultimately that is a component that can happen. And so I think thinking about how that stuff becomes more clear going forward is going to be important. I think Ethereum is a good example of like, that clarity piece that we've been talking about. When you think about is it a commodity? Is it a security type of stuff?
Yeah.
Ultimately, it looks like when you're looking at the movement, today and this week, right, on the Ethereum front, that's tied to the potential for, actually products being available in the financial markets that are, have a high likelihood, it looks like, of passing at some point,
Yeah.
if not, today in the future, right? And I think the big sticking point with that one has been around things like staking and those types of things, right? And so, like, it'll be interesting to see kind of what comes down in terms of guidelines on that front, where, like, is it always a commodity, or can it be a mix of things depending upon how you're implementing on a given technology stack, right, like Ethereum. And so it'll be interesting to see kind of how that kind of gets clear as we move forward, and still always giving us, I think we need that ability to have some level of privacy control to allow some of these use cases to be more interesting and more protective of us as individuals and companies as well.
Interesting.
Yeah. Yeah, just to add on to that a little bit, I think what's going to be super interesting from my perspective, at least, is, well, you can argue about Ethereum. It's an L1 chain. It's got, it's famously been evolving, and I think getting better in terms of latency, lowering transaction fees and so on. However, there's this whole infrastructure layer that's been built above it, which are the L2 chains. And the L2 chains, if anything, are much more centralized than Ethereum, right? I mean, anything like Base, Optimism, Phantom, sitting on top of Ethereum, these are how many nodes are in their network. So when you want to talk about like decentralized versus not decentralized, you get into questions about how many nodes are out there. What would it take for a 51% attack to take over the chain and write whatever block you want? Those L2 chains are going to be more susceptible in many ways than the Ethereum chain is. And so I think what ends up happening is the L2 chains are going to have to be very vigilant to be very compliant. And whatever smart contracts are launched on their chain, it's almost like there's going to need to be a KBA, like know your business,
Yep.
KYB kind of flow before. And it's hard to do, right? Because it's a public blockchain. So how do you restrict activity on the L2 chain? And then those things ultimately get resolved down to the Ethereum layer, sort of as almost like a settlement layer in a way. But they're not writing to the chain, the Ethereum chain, constantly. It's like in big blocks, and that's part of the efficiency. So I think you got to look at that 2-layer ecosystem where you say, okay, well, Ethereum, in theory, could say, we're only going to allow settlement, mostly from regulated, L2 blockchains. And by the way, guys, that's on you to make sure you get that right at your chain level, and you only allow good actors onto your chain. And then for, usage of the chain more broadly, they're going to have to figure out, if you're on an NFT trading platform and you've got a thing that you traded for $1 million as an individual, like, who's responsible for that? Is it the DeFi platform? Is it Ethereum, the foundation? These things are going to have to get arbitrated, maybe even in court, to find out.
The whole concept of permissionless is dimming, quite a bit with the thought of this. And 100% I blame our own industry. Everyone set out, to replace the existing financial system, coming out of the crash of 08, 09, here's Bitcoin, here's all this other stuff. What did we do with this new technology? We did meme coins, we did, garbage NFTs, scams left and right. And no one stood up and said, absolutely not. No one stood up and said, hey, this is let's manage this properly. Let's push the bad actors out of here. Let's push for regulation of ourselves. We didn't. We're waiting for this because we quite simply, as an industry, just, and again, I blame even Coinbase and Kraken and all these other guys for, listing these garbage protocols on there, and because it was a quick buck. Again, Coinbase makes money on volatility, and there's nothing more volatile than meme coins, and it doesn't matter if it goes up or down because they're collecting their fees, and that hurts consumers. So I think there's going to be a lot that's going to happen here. Dash, you agreed with this, but I don't think, I think we're going to look back, 5 years to this conversation today and say, remember all that bullshit that was on there? Like, it was just scams. It was spam. It was like, and now it's clean, but it's expensive and it's, highly regulated. But for those that use it correctly and use it, appropriately, like it's 10 times or 1,000 times better than what the Swift existing system was. Today's episode is proudly sponsored by Beyond Enterprises, the ultimate 360-degree partner for companies ready to embrace the power of blockchain in their business strategies. Beyond Enterprises stands out as a beacon of expertise with a blockchain-agnostic approach that has seen successful projects on Ethereum, EOS, and Arc. Guided by blockchain thought leaders and fueled by inspired advisors, the team has played a pivotal role in over 40 successful ventures spanning token generation events, security token offerings, exchanges, and more. From healthcare to travel, finance, and beyond, Beyond Enterprises has left a massive mark on diverse industries. Elevate your business strategy today with pioneers of blockchain integrations, Beyond Enterprises, trusted 360 partner.
Yeah, I definitely agree. I think we could have done probably a better job self-policing a little more, right? Like it's we see similar things in the privacy space as well, right? Where I think Chris, you mentioned earlier, but like, what's the kind of lowest common denominator that basically covers you across the different regions, right? And like what do you ultimately pick there? And like I think the answer is that you kind of like have to settle on the things that are really just right and ultimately like ethical. Those end up becoming, I think, typically the best kind of long living kind of business use cases as well, right? Like when you do that in the right way. And we haven't done a great job of that in the kind of blockchain crypto space up to this point, even though there's amazing innovators and builders and amazing technology that I think is going to be a core part of everything going forward in a lot of different ways. But yeah, that kind of unfortunately making it too easy to make a buck off of those types of things and then supporting those paths a little too much is not the best thing in terms of kind of making things legitimate and ultimately kind of driving the right types of behaviors going forward, including the stuff that we talked about around protection.
So as a quick question and a theoretical one, and I know that the ink on this FIT21 isn't even dry yet. Could you make a legally compliant tornado cash? Because as you said, there's a lot of reasons why, like I want to use cryptocurrencies. I want to use a wallet as it exists today, but I don't want that hot dog stand to be linked to like my main holdings. I don't want to like, could you, make a legally compliant tornado cash?
Yeah.
Go ahead,
I think absolutely you can. I mean, it's just a matter of, hey, look, a smart contract is a set of instructions to execute at given conditions. One of those conditions is a wallet connects, they prove they have ownership of a private key, and then they're allowed to transact through that smart contract. All you need to do is layer, and we've had this, by the way, for years, but unfortunately, nobody has wanted it, right? No. Up till now. It's like, no, we're good. We'll just let anyone in. But the reality is you can put a condition on there that says if they don't have this identity token, and it can be another smart contract trading with your smart contract, could be an individual, could be an institution, then they just can't trade. And if you put that in front of a Tornado Cash clone and say, everybody who comes in and brings liquidity into this network, including anywhere that Tornado Cash or equivalent is trading, has to be within this network of approved and KYC'd and KYB'd institutions and individuals, then the problem is solved. So it's not that complicated. It's the will to do it and where the liquidity shifts. And right now, the liquidity is in the unregulated space, not exclusively, but the majority of it. And I think once liquidity starts to move into these structures that are compliant, then what you'll see is, to your point, Jay, we're going to look back and say, oh, that was like the Wild West. Now things are a little bit more stable, more predictable, safer for consumers. They may be less decentralized, which I don't love, but I think ultimately that's where things are heading. Yeah.
Dash, I mean, obviously it's not a technical issue.
Yeah, it's not. Yeah, definitely not a technical issue, right? We've solved these problems, and I think Chris, what you're doing at CIVIC makes a huge amount of sense in this future state too, right? Because like identity is such a core part of all of this, and I think identity, but protected identity, is where we need to be right now. But still providing, protective mechanisms for all those that are involved, right? Both the platforms and us as individuals. And I think to your point, Chris, this is a solvable problem, and it's already solved pretty much today. It's just implementing it the right way, and we just haven't done that to date. And so, yeah, I think that's a huge part of what's happening and where we're going ultimately with these things. And I think, going back to FIT21 and kind of where that stuff is kind of moving, right? Like, all of this comes down to that consumer protection layer is like really the core underlying component. And that's that whole idea of like who controls what. And that's why they have the 20% kind of control mechanism piece in there as well, where it's both has to be decentralized, but there also needs to be less than, or 20% or less of full control, right? So that you can not ultimately do some of the things that are happening today with especially things like meme coins and whatnot, right? So I think, yeah, going forward, those mechanisms are going to be a part of all this. And I think this plays into multiple different industries. I think AI is a really interesting one as well. You look at what's happening there, and one of the core issues today is provenance and, who created what and what does that ultimately mean? Who has ownership of a given piece of information, and like, how can that be used, and kind of what's the chain of custody, but also like, how do you monetize those things if you want to monetize them? And so I think there's some really interesting stuff that we've done, I think, on all of us as kind of innovators in the blockchain and kind of crypto side that support those use cases in the future state as well, which is really getting to those things like provenance and ultimately ownership, right? And then being able to monetize things that you want to monetize. So yeah, I see all this stuff kind of tying back to kind of what you're doing, Chris, at CIVIC with identity, and then that identity ultimately tying to things like things that have been created, and then how that stuff can be utilized and things like AI models to do generative and different types of interesting things.
Yeah, we couldn't agree more. It's sort of like there's two sides of the coin. Proof of humanity on the one side. So we do that with biometrics and a uniqueness, 3D face map and so on, but also proof of AI. And there's nothing wrong with being provably AI, either an agent or content that's generated from an AI, but it needs to be disclosed, and it needs to be done under a layer of consumer protection that allows for people not to be scammed, that allows for, true and fair elections, that allows for people not putting their thumb on the scale, nationally and internationally in ways that people don't understand. It's a manipulative technology by design. But it doesn't have to be. That's the bad framing. There's a really good framing, and I think it unlocks a lot of innovation. So long as there are fair disclosures and everybody knows what's happening and the rules of the game. And as an individual, so long as you're not subjected to sort of unfair, taking your profile, taking your likeness, not paying you for content that you've generated. I think everybody is excited by, maybe trepidatious a little bit, but excited about the AI revolution and how can they participate. For me as an individual, I want to know that I have control over how I interact with these structures. I want to know on social media if somebody's trying to manipulate me, or if something is being created at scale to create a certain reaction in myself or in the population at large. And unfortunately, I think right now we're just learning about how these algorithms create these AI models. And when you hear the most senior developers saying things like, we don't really understand how it works, we did all this training on this data, and then like, lo and behold, these answers started like getting spit out. I think it makes people a little bit nervous, and I get that. But I think if we can put in the appropriate level of controls for the individual, for the provenance, and for the legitimate creators, then it becomes if it's verified, you'll know, and everything else you can sort of ignore. It reminds me of like the initial, web launch in the late 90s, 2000s, web 1.0. It was like, well, yeah, you could go to like any website, anybody could spin one up, and they could spout whatever they wanted on there right before the regulatory stuff really bit. And if you believe it, you're out of luck, basically. Yep. So I think we're in that phase where it's, a little bit Wild West, but I think it'll resolve into something.
The next 5 to 10 years are going to be so interesting. And if any of the three of us or anyone that listens to this podcast comes back, in 2030 and says, what do they get right? What do they get wrong? To me, we'll go around the room real quick, but, to me, the things that are absolutely coming is KYC, KYB, AML, like everyone's going to know who in the world they are, even if you don't know, because like right now when you're buying and selling stocks, it doesn't say, Jay and Dash are buying and selling. It just says our brokers are buying and selling. There's going to be a lot of room for intermediaries. And by the way, I built one of these companies called FinRamp. That's exactly what it does, is it allows all the things we talked about today, because we built it based on my car specs. And now it's going to fit right into FIT21. And so we're excited to launch that. But I think it's going to be, very similar to our financial ecosystem that we see today, but on a global scale, faster, cheaper, much more inclusive of emerging economies. And there's always going to be that dark web version. There's always going to be that, like, if you want to go outside the system, you still can. It may be profitable for some, depending on where you live. But I think that the raising the bar and raising the adoption rate of blockchain technology is good for humanity. And that's my thoughts. Chris, we'll jump to you, and then Dash will for closing thoughts.
Yeah, I feel the same way. I mean, I think it's an exciting time, and I think these innovations ultimately are good. I think about things like I don't want to throw out the good part with the bad part. And the bad part, the scammy stuff, gets a lot of focus. But let's also remember there are people sitting in countries who have hyperinflation, who have a devaluing currency, who are able to go and buy a stable coin or buy Bitcoin, and they can actually feed their families on the back of that, right? They don't lose their entire life savings in an instant. And censorship resistance, I think, is also really important. If a national entity can seize all of your assets at any time from a central bank, are they really yours? And what kind of freedom is that you're living under? So there are so many good things that the crypto industry has brought, and I think we have to be really careful not to overcorrect on all of the regulatory, friction and framework and compliance, such that we then exclude again this entire population of people who I think have a very legitimate need for these kinds of services. And the countries that they live in may not be always open to those things. So somehow we have to balance the regulatory compliance, the fact that, yes, there are scammers in the ecosystem, we need to get them out, with these very legitimate and I think good for humanity, as you say, Jay, structures that ultimately are going to, I think, be needed and be necessary. Not everybody lives in a free country and with access to all the wonderful things we have in the US and the Eurozone and different countries around the world, unfortunately. And I think we have to recognize that and always keep that in the front of our mind as well. So for me, it's exciting. I want to see clarity on the crypto compliance stuff, of course, because it will drive innovation. But I also want to make sure that we don't throw out the good things with the bad.
Interesting. Well, and I love that. Dash, bring us home.
Yeah, I definitely agree with you, Chris, and you, Jay, as well. I think talking to what you're just mentioning, I think around the power of decentralization and the power of kind of enabling innovation, not just in kind of well-developed countries like the US, but enabling innovation and protection of people across the globe is super, super important here. And we don't want to lose that, even though we do need some regulation here, right? So there's definitely, we've talked a lot about that idea of clarity and why we need it. And I think it's super important to make things more legitimate, easier to innovate, easier to understand as builders as well as consumers. And so all those things are super important. But yeah, you don't want to lose all the stuff that made it special to begin with. And so, yeah, I'm looking forward to seeing if there's a way that can balance itself out over time. I think it will. I do think that we can get to a place where we're not overregulated to the point where innovation is stifled. And I think it does seem, at least, with the FIT21 Act and some of the other acts that are passing kind of across the globe, both around privacy, around things like blockchain and crypto, but also AI and the other kind of interesting areas. All those things are starting to come together via these different regulations and acts that are ultimately there to protect us as individuals and protect our companies that we're building and the innovation that we're creating as well, but still doing it in a way that kind of promotes that innovation, in the future state, so that it's, again, not stifling those things. And I think everybody's excited about all these future states, right? Like, what does generative mean 10 years from now, right, on the AI front? And where does it go after? Do we get to AGI stuff, right, when we ultimately get autonomous agents that are actually doing really interesting things on that front? And we will get to that point. TBD kind of what level we get to there, but and how how dangerous that can be in some areas. But ultimately, I think those things are good for all of us as builders, as people, and ultimately as just individuals across the board, right? Like, and what all this stuff means to us and the future ability for us to do these really interesting things in safe and protected manners.
The one thing I will say to me is we are so early in this evolutionary cycle of this. It's we haven't even begun the concept of true real world asset tokenization. The entire cryptocurrency market right now is under $3 trillion. And to some people, that sounds like a lot. Real estate by itself is 330 estimated $1 trillion. We're not even 1% there. I mean, we have so long to go to evolve this, because the goal is that you want to put, like, I don't mean this as a fictitious number, $2 quadrillion on the blockchain. The blockchain can hold it much better than Swift and all these other centralized servers. But it will take us a decade plus, even once we solve the rules, the regulations, the technology, and everything else, just to do that migration for all the systems and tools that Chris talked about earlier. Back then people were like, how do I get on the fastest, point-to-point network to be able to do my trades, because it means something. And in the near future, it's going to be, I got to be on the fastest blockchain because I need my settlement to happen, faster than anyone else. And so it's going to really be this evolutionary and revolutionary cycle that's going to happen many more times, and chains we've never heard of, concepts that haven't even appeared yet, are really going to change this world. So I'm excited for it. I think this is a massive positive thing, no matter who's screaming and crying in the corner about the KYC stuff. Sorry, you just, OFAC is a real thing. We all need to be concerned about it. But I'm very, very excited, and I can't thank the two of you enough for your time today.
Yeah, thank you so much, Jay. Pleasure to be here.
Awesome.
And if people want to check out civic.com, definitely encourage you to do that, or civic.id. You can sign up to be one of our first. We're doing a physical identity card, believe it or not, as a crypto company. So please sign up. You can be an early adopter.
Or does it meet Real ID standards?
It's going to be right there. We're more announcements coming soon, but
that's huge. That is a major deal.
It's going to be a powerful document. Yeah.
Ash, where can we find you?
Yeah, thanks for having me as well, Jay. Always great to be here. You can find us at concord.tech. So we provide, of course, data privacy solutions for all sizes of companies, from kind of free offerings for our startup kind of growing company folks, and then also more advanced solutions for larger companies. But concord.tech. Reach out if you need anything on the privacy side.
Love it. You two don't go anywhere. For the rest of you, yWhales, we'll see you guys next time. Take care.